question number 3. Explain the difference between explicit and implicit cost. Give an example of each. An implicit cost is the cost occurred but is not initially shown or reported as a separate cost. On the other hand, an explicit cost is one that has occurred and is reported as a separate cost. Below are some examples to illustrate the difference between implicit and explicit costs. So first off, we'll just say implicit cost is the same thing as opportunity cost, or you call it economic cost. And this is just the cost of the value of what you could have, the other economic activity you could have been doing, rather than the current economic activity you could be doing. So basically the cost you forego to participate in an economic activity. And that's not only the monetary value, but also the benefit that you gain from whatever the alternative could have been. And explicit costs are just your regular costs, so fixed costs, variable costs, all of that. Regular costs that are just reported on a statement, like he said here, and they can also be called accounting costs. Now let's see the example here. Let's assume the company gives a promissory note for $10,000 to someone in exchange for a unique used machine for which the fair value is not known. The note will come due in 3 years and it does not specify any interest. Due to the company's weak financial position, it will have to pay high interest rate if it were to borrow money. In this example, there is no explicit interest cost. However, due to the issuer's financial duty and the seller having to wait 3 years to collect the money, there are some interest costs. In other words, there is some interest and it is implicit. I don't think I agree with that. Let's keep reading. To properly record the note and the machine, the accountant must determine the amount of interest, which is known as input into interest. In effect, the accountant must convert the implicit interest to explicit interest. This is done by discounting the $10,000 by using the interest rate that the issuer of the note would have to pay to another lender. And the rate is 12% per year. The interest that was implicit in the note is $2,880, and the principal portion of the note is $7,120. If another company with some financial condition purchased the unique machine by issuing a $7,120 note with a stated interest of the 12% year, the interest cost of $2,880 would be explicit. In this situation, there is no need to impute the interest. Another example of implicit costs is the opportunity cost of the sole proprietor working in their own business. For example, Gina works as a sole proprietor and her business reported a net income of $30,000 for the year. Since the sole proprietor does not receive a salary or wages, there is no explicit cost reported for Gina's work in her business. However, if Gina is foregoing the salary of $40,000 from another company, that is an implicit cost for her business. After considering this implicit cost, Gina is losing $10,000 by working in her proprietorship. If Gina operates her business as a corporation, Gina will be an employee of the corporation. If her annual salary is $40,000, the corporation's income statement would report the $40,000 salary in there as an explicit cost for Gina. Okay, so it seems like this person has somewhat of an understanding of implicit and explicit costs. I'm gonna say we'll just make this simple and use his second example here with the example of the implicit cost. If Gina were to, and another implicit cost is the opportunity cost of a sole proprietorship for working in her own business. So if Gina was working in her own business, her implicit cost would be the whatever she could have done instead of working for her own business. So if she worked for a corporation, that 40,000 would be reported as the implicit cost. So basically, the implicit cost is just the opportunity cost. And explicit cost, well, there's different costs that she could have used to start up her operation, or even just get something as simple as a desk and an office chair in her office. That is a cost for her business, and those are actually explicit costs because it has to do with her current business and what she's doing. The implicit cost, like our tutor here said, it would be if the salary of another job was 40,000, her implicit cost could be that salary of 40,000 that she's missing out on to work as a sole proprietor. So we'll say for the most part, this is correct. But some of the explanation is wrong.